Welcome to TradeTheNBI.com. This is John. This report is for the 4th of April. Well, and I've tried to keep the criteria pretty simple. Below this 23% line, which, let me put up the window so you can see where it says the 23%. There we go. It's still the 26.1650, and I've been mentioning that on the Skype chat over and over again. Above, you can be long, but below, your bias has to be to the short side. We ended up with this sporadic, not even a buy setup, because we didn't have the orange dip below. And again, it's a good point to show that when you see that dip and the movement that takes place after you get those dips, it's because it creates an extreme condition within the algos in the relationship between themselves, and that's the significance of it. Just because we had the green crossing over red, yes, that's bullish, but the problem was your short-term buyers, they're all spent. They got nothing. They're broke. So they're relying on the other flows to come in. Now, that's supposed to happen at about this time of the month. Did we start to see a little bit of it at the end of the day? That was just an interesting freak event, and everyone says it was related to the White House not going after Amazon in an official capacity, and that sparked the move in Amazon, which created a market-wide activity. If you believe that, you're entitled to believe whatever you'd like. Unlikely, more likely something broader than that, and something that has a lot more reach, and usually a three-letter situation, maybe FED, who knows. Anyway, it's irrelevant to what we're doing because, again, we're just looking at what we're seeing from our readings, and we've got weakness. Just no other way around it. And we don't even have that many shorts active in this situation, despite the fact that we're below this 23%, which makes sense. Not a lot of people think it's exciting to short when you're at these levels because they think they're bounce levels, but the reality is you tend to get stronger movement back towards the base before you get any pop. So that it held up here, we're below it. We're at the bottom side of the range, which is, depending on your preference, some people will pick closes, which tend to make a little bit more sense, but we're right inconsistent with that bottom area of it. We had the freak low below it. Yesterday we finished up at the highs, which is another one that I'll point out because that was an interesting intraday setup, and we had plenty more of our little setups with the gold rising configuration reaching the peak. So nice downturn here on the NQ, same situation. It was still, you can see a slightly improved condition over the S&P, and that's because it was actually closed well above the 23% line, and just now in the pre-market has been fading, and that fade is to do with that late burst of buying. The euro at the low end of this upper side range, it's still way out. Maybe we're going to start to see a little more decay. We barely have a dip of the shakeout below zero. You'd need to see that momentum climb, and realistically, a move back down here into the 118, 116 would be dramatic at this particular stage, but it's certainly helping U.S. stocks stay at elevated levels. Again, the overmove on Treasuries has just been ridiculous, but with rising rates, there is going to be an alternative to the market and market risk, and that is something that always has to be borne in mind. And that's why when I give out a level like that of that 23%, it's pretty straightforward. Some people are always wanting to catch a bottom for the buy move going there. I'm like, you've got a simple pivot. Beyond that, if you're below that 26.16, you could be looking more towards the downside move than upside. Now, it was yesterday that I had given a 25.99 target because of the 5K is where the algorithms took off. And we didn't quite reach it at the end of the day, but we'll see how it's doing pre-market in a second here. Oil. Again, still up at the peak levels, and this is still going to have an inflationary impact coming down the road. Hasn't been worked out yet. It's going to start to have its effect here in the next couple of months, right into summertime, of course. That's just what you want. And gold, we should start seeing gold spiking more. It's been under some pressure here. Had some positive extremes. This is kind of a strange thing to see it push this much, because the signs are clear of where things are headed. So it's interesting to see that. So this is what I was talking about. Oh, I got too many things overlaid there. There we go, nice and clean. You'll notice we don't see the numbers. What I do is I removed my test factors for the ABM work on the resets that I was doing with the ABM DOH. So I'll be sending those out with adjustment, because people were getting a legacy problem where it was too many numbers were popping up on their charts. I wasn't having it, but on a dedicated server I run pretty big RAM in that, and so it doesn't seem to have that same impact. But what I was talking about, well, we ended up with the rising gold situation on this above 50%, which meant that we were looking for highs to go. Did exactly that, and then right here when we were below 50% and had the rising gold, we were looking for lows to be reached, and we got just that as it decayed swiftly going back down. And what was interesting about this move, I was looking at this positive extreme that was right there, and if you look at the low, was 25.9950 was the expectation for retrace. And lo and behold, we just hit that a few minutes ago. Okay, perfect. So that was exactly the expectation. I warned that it wasn't going to be a straight line, because I mean, even back here when these were starting to happen, we were just getting a lot of muck, but there was still a significant amount of bullishness with the positive shakeout readings, but still knew that they were going to come back and hunt this positive extreme, because they forced this spike, and this was a massive move. You consider we ended up with a series of buys, but even off the 23% when we were coming up here, we had the shakeout completely rebuilt after nice decay. And so, you know, you took the 23% move from right about here, was at the 25.84 all the way up to the 26.16. So, you know, that's a significant move, all in just a matter of minutes. In some of these cases, I think it was a minute and a half for these three bars right here. If we look at the times on the stamp, it was 47 to 48.20. So that's super fast to go through 15,000 contracts as you're looking at that. So that was pretty dramatic stuff. Now we can see we're in this complete decay right here, and fading to the lower side of well, the range. We had rising lows, so you knew price was being drawn to the low. So it did exactly that from a Morganacci or fib level retrace program. So all in all, I think the market, despite what some people think, is behaving quite normally, and certainly within the expected parameters that we have. So it's exciting now that we have all the functions that have been sent out along with the indicators, giving everyone the ability, because as you saw, like the 6 and 7s, all those were configurations for when we had setups where you either had the green moving below red or then the orange, and it was just trigger points. But you can certainly will be able to put those into your own setups as it goes. So that's makes for a fun aspect. I'm going to be working on the Morganacci here, so that you'll be able to have that one as well, and that would give you individual programming power over all of the line functions that we look at. But again, always important to find the powerful configurations and the key levels, and that's why I put this 2616. We just hit it, and you can see it turned out to be significant resistance. Hit it twice, couldn't sustain it. Third attempt, couldn't even get up to it, and that led to the full retrace. So I would just suggest that you be keeping a significant eye on pops that happen and get overbought, particularly when you see these kinds of extremes, because I don't think that it's a surprise to get that kind of buyback bounce, because then you get shorts terrified. Actually, I should shrink this chart so you can see the whole day, because we didn't even look at the whole day, because it was pretty dramatic. We had several nice moves, both to the upside as well as to the downside. And it was a pretty decent work through the day, because once we get to the highs, we ended up making all the way back down to the lows. That was a great short going through there, and then it built back up over the 23%, and then just kept going, and it was a slow, methodical run to the peak, and then it rolled over again at the top a little bit later here, depending on if you were following the ABMs, and then just right around the 50%, you ended up with the lows starting to rise, but it held up pretty well throughout most of that, even though we had soft shakeout. Got close to the low. We matched this level right here with the lows that came in, hits the low from the higher point, and then we came down from there, and then it just kind of was back and forth until we had this wild flip out. And these were significant ranges. I mean, we're talking 15, 20 points. That was 94 all the way down to 82. 12, 14 points is pretty reasonable, and then you have this, 40-point move going the opposite direction all at once was quite dramatic, because we were posting about this one because it was in the short as we were expecting the new lows off the rising gold and then fading shakeout, and it was talking about lowering stops along with the 38% line, and then it was like instantaneous. It just hit it in that. And normally I was typing, but usually I would have my buys going right above it for turnaround, and I didn't, unfortunately. So I missed out on the significant one, which that's okay, because I had that monster day the other day on the huge decline. So that's the beauty of the market. There's always going to be the next day, the next huge run happens, and so it's just a matter of being there and being positioned correctly by just paying attention to what our readings are and going with the direction as opposed to trying to expect it to change. It will tell us when it's going to change, either to the long side or to the short side. So you just want to remain nimble to it. There's nothing wrong with having your bias, but at this particular point you realize that we're under the 2616, so the bias is to the downside. It's not personal, it's just the market. As always though, trade well. We'll talk again later.